Hey everyone, welcome back to Corporate Decoder, the place where we break down endless corporate jargon into plain English. And if you thought last quarter was dicey, wait until you see what is hiding in this filing. So we are diving deep into the N-CSR filing from the permanent portfolio family of funds. This isn't your typical quarterly update, it is a certified shareholder report, and sometimes these can be packed with juicy details about how your money is actually being managed. We are going to cut through the noise and find out exactly what is going on with their investments and how they are performing for shareholders. Before we jump in, if you appreciate getting straight insights from these dense corporate documents, make sure you are subscribed. We also have a Discord community linked in the description below where we discuss these filings and much more. This document essentially gives us a snapshot of the permanent portfolio family of funds as of the 31st of July 2025. It tells us what they own, what they did, and how much it is all worth. Think of it like a really detailed scorecard covering the first 6 months of 2025. Given the current economic climate, understanding where these funds are invested and how they are performing is more important than ever. Let us start with the flagship permanent portfolio itself. This fund aims for a balanced approach investing across various asset classes. For Class I shares, the report indicates costs of a $10,000 investment were $4,285 annualized. This means that out of every $10,000 invested, shareholders paid out about $42.85 for the services and expenses associated with running the fund annually. Key statistics show total net assets at a massive $5.34 billion with 202 holdings. The portfolio turnover rate here is 9.02%. This number tells us how often the fund managers are buying and selling assets within the portfolio. A lower turnover rate like this generally suggests a more buy and hold strategy, which can sometimes mean lower transaction costs and potentially less active trading, which some investors prefer. It signals a strategy focused on long-term value rather than short-term market timing. Now, for the really interesting part, the investments in permanent portfolio, they have nearly 20% of their assets in gold assets. That is a staggering $1.03 billion in gold bullion and gold coins. This allocation to gold is a classic move for investors looking to hedge against inflation or economic uncertainty. They also hold 4.28% in silver assets, making up another $228 million. Then we see significant holdings in Swiss franc assets, totaling over $413 million, primarily in Swiss Confederation bonds. This shows a clear strategy of diversifying currency exposure beyond the US dollar, aiming to protect against currency fluctuations and adding another layer of diversification. Moving on to equities, they have 14.36% in real estate and natural resource stocks, nearly $770 million. Breaking this down further, we see holdings in companies like BHP Group, Limited Camco Corporation, and various real estate investment trusts. They also have a substantial 20.56% allocated to aggressive growth stocks, totaling over $1 billion. This segment includes well-known names like Nvidia Corporation, Broadcom Inc., Disney, and Meta Platforms. This shows a balanced approach, not shying away from growth potential, even within a defensively positioned portfolio. When we look at dollar assets, which make up 32.87% of the portfolio, over $1.75 billion, it is dominated by corporate bonds across various sectors, like aerospace, chemicals, and consumer products. They also hold a significant chunk in US Treasury, securities totaling about $498 million. This blend of corporate bonds and government securities gives them exposure to different segments of the debt market. Now let us switch gears to the short-term Treasury portfolio. This one is much simpler, with nearly all its assets, 97.42%, invested in United States Treasury securities. Total net assets are around $13.7 million, and the holdings are primarily in Treasury notes and bills. The cost of a $10,000 investment here is about $33.67 annualized, indicating a very low cost structure, fitting for a short-term fund. The portfolio turnover rate is 10.71%, which is reasonable for this type of fund. The versatile bond portfolio has total net assets of roughly $92.8 million. The key statistic here is that 83.96% is invested in corporate bonds. They are also holding 12.38% in preferred stocks, which can offer higher yields than common stocks, but with less upside potential and sometimes more risk. The cost for a $10,000 investment here is about 0.67 annualized for Class I shares, which is quite competitive for a bond fund. For the Class I shares of the versatile bond portfolio, the cost of a $10,000 investment is 45.91 annualized, which is higher than Class I shares, reflecting the additional fees associated with this share class. The portfolio turnover here is 8.65%, which is quite low for a bond fund. again suggesting a strategy focused on long-term holdings rather than active trading. Finally, we have the aggressive growth portfolio with total net assets of about $246 million. This portfolio is heavily weighted towards equities with 95.73% in aggressive growth stocks. They have significant holdings in aerospace, chemicals, and computer software and services. The sector breakdown includes companies like Lockheed, Martin Corporation, Air Products, and Chemicals Inc., and Palantir Technologies Inc. For the Class C shares of the aggressive growth portfolio, the cost for a 10,000 investment is a significant 118.24 annualized. That is a high cost compared to other share classes, reflecting the distribution and service fees often associated with Class C shares. What is interesting here is the portfolio turnover rate is listed as a dash, which typically means it was not applicable or not calculated for this period. This could indicate a very static portfolio or a reporting anomaly, but it definitely stands out. Scroll statements of assets and liabilities. We can see the combined financial picture. Scroll statements of assets and liabilities. We can see the combined financial picture. For the permanent portfolio, total net assets are over $5.34 billion. The report breaks down where all that money is kept from investments to cash and other receivables. On the statements of operations for the 6 months ending the 31st of July 2025 permanent portfolio, reported $29 million in net investment income. This is the core income generated from their investments before accounting for realized and unrealized gains or losses. Aggressive growth portfolio, on the other hand, reported a very small net investment income of just $104.98. The real excitement often comes from the realized and unrealized gains. Permanent portfolio saw a massive $407 million in net realized and unrealized gains. Aggressive growth portfolio also had a strong showing with over $12 million in gains. This is where the Lion S share of their reported profit comes from. Now let's look at the financial highlights for the permanent portfolio class I shares. The net asset value per S share at the end of the period was 68.31. This represents a total return of 9.79% for the 6-month period. This is a solid return considering the broad diversification. The ratio of expenses to average net assets for permanent portfolio class I shares is 0.80%, which is quite good. This means for every $100 managed, only 80 cents went towards expenses, which is competitive in the industry. And finally, the notes to financial statements provide crucial context. They detail their accounting policies, particularly how they value their investments. Gold and silver bullion are valued at spot prices. They use quoted prices in active markets for level 1 assets. They have very few level 3 assets which are valued using unobservable inputs. And this is generally a good thing because it means their valuations are based on market data rather than subjective assumptions. Everything here seems to follow accounting principles generally accepted in the United States, and there are no major red flags in how they are valuing their holdings. The permanent portfolio family of funds clearly aims for broad diversification with significant allocations to tangible assets like gold and silver alongside traditional investments. This approach is designed for stability and to act as a hedge against various economic conditions. The aggressive growth portfolio, while still a part of the family, shows a strong focus on equity markets aiming for higher returns, though with higher inherent risk. The costs are generally well managed, especially for the Class I shares, but investors in Class C shares, especially in the aggressive growth fund, should be aware of the higher fees. Overall, the fund appears to be operating with a clear strategy focused on diversification and long-term stability. What is your take on these numbers and what they signal for the company? S Future, do you think this diversification strategy is the best way to navigate current economic uncertainties? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description where we continue these conversations. Thanks for watching. See you next time.